What if I told you that every bad investing decision you've ever made, the panic sell, the holding too long, the chasing of that hot stock, wasn't your fault? It was your brain. Not because you're irrational, but because your brain was built for a world that no longer exists. Stay with me, because by the end of this, you'll see money and your own mind completely differently. Here's something nobody tells you when you open your first investment account. The market is one of the few places where the smarter you think you are, the more dangerous you become to yourself. A landmark study tracked 66,000 investor accounts for 6 years. The investors who traded the most underperformed the market by almost 7% a year. The ones who barely touched their portfolios, consistently ahead. That's not a coincidence, that's psychology. Your ancestors lived in a world where hesitation meant death, where the correct response to a threat was always do something, run, fight, react now. That exact brain is the one you're using to make 30-year investment decisions, and it has no idea what it's doing. So what's actually happening in your head when markets go red? Your amygdala, the brain's threat detector, fires identically whether you're watching a falling portfolio or running from a predator. Cortisol and adrenaline flood your system. Those hormones physically shut down your prefrontal cortex, the part responsible for patience and long-term thinking. So in the exact moment you most need to think clearly, you biologically can't. Then there's prospect theory, the Nobel Prize-winning discovery of Kahneman and Tversky. Losing money hurts twice as much as gaining the same amount feels good, not a little more, twice, measurably. And markets fall on 47% of all trading days. Check daily, and you're absorbing disproportionate pain almost every other day, for data that means nothing over 30 years. Benartzi and Thaler named it myopic loss aversion. The more often you look, the worse your decisions get. Now be honest with yourself for a moment. Ever held a stock long past the point you knew it was finished, because selling meant admitting you were wrong? Sold a winner the moment it turned green, then watched it triple, piled into something just because everyone was talking about it? That's not bad luck. That's the disposition effect, herd mentality, and recency bias playing out inside your real account. Terence Odian studied 10,000 brokerage accounts. Investors sold their winners 50% more readily than their losers. Locking in a gain feels safe. Sitting with a loss feels like hope. And going against the crowd, neuroscience shows it activates the same brain regions as physical pain. That's why people who know a bubble is forming keep buying. Stopping hurts more than continuing. Fidelity once looked at which of their accounts performed best. The winners belonged to people who had forgotten the account existed or had died. The investors who did absolutely nothing won. I'm not telling you this to make you feel defeated. Once you see the pattern, you can't unsee it, and for the first time, you have a real choice. The investors who build serious wealth aren't geniuses. They've just built systems that protect them from themselves. And that's something you can do, starting today. 5 things backed by research you can implement right now. 1. Delete the app. Check your investments deliberately once a week at most, ideally once a quarter. Less stimulation, less cortisol, better decisions. 2. Write the plan before the panic. Before the next crash, and there will be one, write down exactly what you'll do. Rules written by your calm self will outperform your panicking self every time. 3. Automate it. The day your salary arrives, money moves into investments before you ever see it. Thaler won a Nobel Prize proving that removing the decision removes the emotion. 4. Ask the fresh start question. If I didn't own this today, would I buy it at this price? If no, you're holding for emotional reasons. Make the rational call. 5. Before any new investment, write 1 paragraph explaining why, with no reference to what's trending. If you can't make the case independently, you're following the crowd. And the crowd buys at the top and sells at the bottom. Your brain is not broken. It's optimized for a world that no longer exists. The market doesn't reward the most intelligent person in the room. It rewards the one who's learned to quietly, consistently, calmly get out of their own way. That's the edge. It always has been. Share this with a person you know who might need to see this today. That's the first step in building awareness and helping someone. Come back soon to learn about another psychological force that controls your money. Because understanding money starts with understanding your own mind. I'll see you then.